your testimony, you mentioned that back in 2003, the full integration of the corporate taxation system came within just a few votes of becoming law, finally becoming reality, and you made a convincing argument that businesses should choose their form, their corporate form, based on the type of business they have, the type of business strategy they have, rather than having to game out the tax code. Can you discuss with us just a few potential ways in which full integration of business taxation might occur today, or ways in which the tax burden of C corporations and pass-through entities might be kept in balance so that the decision of how to organize a business is driven by business considerations rather than by the tax code?
Sure. Yeah, no, I'd be happy to. Thank you. You know, I think the committee has discussed a little bit sort of this dilemma of that you have big S corps and you have similar sized C corps and they're taxed differently, and you know, how do you reconcile that? And you know, my argument is that the S corp is taxed correctly, so you should move the tax code towards that single layer of tax. And one of the ways to do that is to integrate the corporate code with the individual code, so that if you're paying tax at the corporate level, then there's no shareholder level tax, or vice versa. If you don't pay tax at the corporate level, then you have a shareholder level tax of an appropriate amount, and then that's the tax that the company pays. In 2000, and I guess one of the other sort of themes is that, well, we can't quite get there. There's no way to do that. Well, we came really close in 2003. The President's original proposal was full integration of the corporate code, where if a corporation paid a tax on the dollar that it made, then there would be no subsequent tax, either as a dividend or when the shareholder sold the stock as a capital gain. That plan passed the Senate. It came very close to passing the House, and that's the compromise was that we ended up with a 15% rate on cap gains and dividends, which got us pretty close to the idea of, you know, a single layer of tax, certainly much closer than we've been in since World War II. I think there's two ways to do it. My understanding with your plan is that you have, if the corporation pays a tax, there's no subsequent shareholder level tax. The challenge with that is the optics, that it looks like the shareholders aren't paying taxes when in fact they're carrying the burden of the tax paid by the business. And I think you guys get around that by having a notice sent out to the shareholder that this much tax was paid by the business on their behalf. The other way to do it would be to allow the corporation to have a dividends paid deduction, so that the corporation, when they kick out a dividend to the shareholders, they don't pay a tax at the corporate level, entity level, but that the shareholder pays that tax. I like that because it makes the tax explicit at the shareholder level. The challenge with that is that, you know, there's, I think, 40% of C Corp equity right now is paid by, or owned by tax-exempt taxpayers, IRAs, trust funds, college funds, et cetera. So how do you deal with those shareholders is difficult.
There's probably not an easy fix to that.
There's not an easy fix to that. So I think sort of your solution is probably the most elegant. But the bottom line is that, you know, if you want to make U.S. businesses more competitive, the double tax is the big challenge. Our competitors don't have double taxes on their tax. Most of our competitive, you know, countries that we compete with, they have integrated their corporate code with their individual codes. So we're an outlier there. We should fix that.
And once you have double taxation in place, that therefore makes it a lot more difficult to design a fair tax code, a fair business tax code.
Well, I think you have two challenges. One, it drives up the cost of capital because you've got the two layers of tax, and that means that you're driving investment out of the U.S. and into foreign markets. And two, you have a huge behavioral issue, which is, you know, one of our members testified before the House Small Business Committee earlier today, and in his testimony he talks about when they were a C Corp, they didn't want to pay dividends because they didn't want to face that second layer of tax. But if they have shareholders who rely on those dividends, then suddenly what's the point of being a shareholder of a company where you're not benefiting from the success of the company? That endangers the future of the company because the shareholders say, no, let's sell the business. Let's sell it to that big C Corp multinational down the street. And so the challenge is that, you know, if you're not going to, you know, I got kind of lost in my rhetoric there. If you're going to, you know, move the tax code in a correct way, you want to move away from the double tax. You want to make sure that business income is taxed a single layer, it's taxed at a reasonable rate, and then that's it. And you get away from both the cost of capital and the behavioral challenges.
Was this, by the way, the single biggest argument that sunk the 2003 plan that would have fixed it? Was it the argument that you're somehow helping
I think there was opposition on some important people on the House side, but you'll have to talk to them about exactly why they didn't like the idea.
Okay.
Yeah.
Well said. I see my time's expired. Thank you very much. Thank you, Mr.